Hello and welcome to Bloomberg Quint. Crompton has come out with an inline set of numbers, and joining us we are having Managing Director Shantanu Khosla with us. Hello sir. Sir, I would like to ask you that your margins have contracted by around 30 odd basis points. Can you know the reason for it? Can you tell us the reason?
Absolutely. Our margins did come down specifically on our fans business in the last quarter, though they were stable if I look at the previous quarter. This was essentially driven by a spike in commodity costs. We believe that this commodity cost spike is now largely behind us, and we should recover those margins moving ahead.
From this, your net profit has increased by around 29 odd crore rupees due to a write back. Can you give us the details about the write back, what it is?
Yeah, sure. You know, when this company was first formed with a demerger, there was a creation of goodwill. Now, at that point in time, what is there is that you can depreciate the goodwill over time. In abundant caution, however, what we did is we did not show the depreciation benefit in our numbers, and in fact we actually paid our advance tax assuming there would not be a goodwill benefit. So what has happened is, a few months ago we actually received our first completed assessment order from the income tax for the first period of the creation of this company, in which they passed the charging of goodwill as a depreciation item. And that is what we have written back in this quarter, but only for the period where we already have a income tax order and an assessment completed. We continue to follow the same process moving forward, and we will write back only when we get an income tax order for each succeeding period. The total amount is about 250 crores, and assuming we get favorable orders in our income tax filings as we've got last quarter, we will keep writing back this amount every year.
Okay. So how has the sales been for your fans and coolers going into the summer, especially the southern markets?
Well, our ECD business on a full year basis grew 16%, and for the quarter grew at 10%. There was a slight slowdown in the previous quarter, essentially on fans, essentially driven by the fact that there was, if you recall, an extended winter and a delayed summer, so some seasonality impact. But we believe that that impact is temporary, and as we're looking at our business in the current Q1 over April and May, we are seeing the business and the demand bounce back to what it was as the summer has hit.
Sir, there's a consumption slowdown happening. So is your company feeling the pinch of it, or is there any kind of a liquidity pressure happening with the dealers?
To be honest, we are not seeing any consumption slowdown, except in the case of fans temporarily, which was driven by the late onset of the summer season. Part of the reason, I believe, is our goods are not really bought on EMI and things like that by the consumer. They've always been bought at the point in time, so it doesn't get impacted by liquidity. In terms of the trade, well, you know, our entire go-to-market effort is about creating consumer pull and working on lean inventories. So we are not really even seeing that be an impediment to our business. So not really, no, we are not seeing overall demand slowdown.
And sir, what is your current capacity utilization and any kind of investments in the anvil for FY20?
Our capacity utilization is in our own plants, which make about 50% of what we sell, is quite high. Now, what we are investing in capital is not a huge amount, but the broad areas are in terms of gradually in-housing more and improving the efficiency, quality, and effectiveness. So, for example, we're investing in machines and automation in our lighting plant in Baroda. We are bringing parts of our fans production in-house, such as table table fans, we are now going to start making them in our own factory. We are bringing in some of the operations and investing in that, such as winding of our motors and bringing that in-house. But it's not a huge significant amount. I mean, our total capital plan on these kind of areas would be in the range of about 50 crores.
So there has been a steep competition for the LED players in the segment, especially the unorganized sector as well as the organized sector. So how do you look, your margin outlook for this sector itself as well as for your company going ahead for FY20?
Well, we have done a lot of work to make sure that we have brought our margins back to what we believe is the right level. And this quarter we are back, as we had committed, to a low double digit, which we believe is the right sustainable margin. The second thing which we are doing now is to continue to work to drive profitable top-line growth. It's important to note that while our overall lighting business in terms of top line was flat, our LED business, which now comprises 85% of our total lighting, if I net out the ESL business, actually grew at 11% in value terms and about 25+% in volume terms. We are driving critical innovations to help drive premiumization. So, for example, we've introduced a truly wonderful innovation in lighting at the back end of last quarter, which is an antibacterial light bulb. You just use this as a regular light bulb, but it is also proven to kill up to 85% of bacteria in the home and therefore make it safer and healthier for the house. This is literally a world-first innovation. We are selling this at about a 15% premium, and so far results are extremely encouraging.
All right, so we leave it till there. Thanks for talking to Bloomberg Quint.